Hello everyone, it's Dale here. Today's video is going to be done by Vivek, who is a member of our trading course and a funded trader who recently got funded with $1 million. And Vivek is trading smart money concepts, and here is his smart money analysis of the NQ and ES for this week. So enjoy, and I hope you'll like it.
Hi, this is going to be a weekly analysis video for May 19 to 24th. I'm recording this on Sunday evening where the futures market is already, started. Now, this is a weekly NQ candle. I'm going to be doing the analysis for NQ and then followed by ES. This is a weekly chart for NQ, and if you see, a lot of bullish signatures out here, right? So if you look at it, weekly FVG right here, um, by this expansion candle, another weekly FEG by this expansion candle, and then this is an inversion that was created. So this was a bearish FEG which got reverted by this, right? So now this is again a bullish inversion. So all three are bullish signatures. So till we really see the contrary, my bias for this week is going to be bullish. All right. So let's look at, just one important data point that I'm going to be referring this week from this chart, which is going to be this level, the top of the wick of this candle, right? Which is 18348.50. And why is that? So, look at it this way. Let's say this candle, which has started to form for this week right now, let's say the low of this candle is somewhere here, right? And let's say the high of the candle may be somewhere here, for example. Then what will happen is there is this FVG that will be created from top of this candle to the low of this candle. Let's say this area, right? If it closes somewhere here. And typically then what we'll see as a follow-up would be for this candle to revert back to the FVG, rebalance it, and then moves higher if the order flow still remain bullish, right? That's a typical sort of workflow. But imagine that the market is in a hurry to go higher, for example, right? Scenario one. Then what may happen is this candle will get all the way here, right? And sometimes you will see that the low of the candle will be somewhere very close or exactly to the tick of this and then revert. So in that scenario, what will happen is when the following week arrives, right, the next week, there won't be any inefficiency here. And then that suggests to me that the market really wants to go higher and quickly, right? So this is one of a very key signature that I watch, and this is called immediate rebalance. So immediate rebalance would mean that a weekly candle would come here, right, somewhere close to this, right? So there's no gap between the high and the low, and then sort of takes off. That's number one. Now the other scenario can also be that if the order flow really gets bearish, then obviously it can be it can be a lot deeper. So irrespective, what we have to monitor is this particular level and how the price reacts to it, right? So this is one level that I'm going to be watching very, very carefully for this week. All right, that's number one. Number two, now let's get to the daily chart. The daily chart, again, you see a lot of these bullish signatures, just like the weekly chart, right? And last week, the inversion, it came down a little bit, but see, even here, it couldn't even touch the mean of this particular fair value gap, and it closed above it, right? So these are all very bullish signatures, right? So now I'll also go and look at the 4-hour chart, and the 4-hour chart, the first sign of crack, let's say, or bears getting control, to me would be this particular any candle rather on this chart closes below this fair value gap, right? So that would be the first crack, I guess. And when that happens, very likely what we'll see is that if this is the dealing range low and the dealing range high, this is the equilibrium, right? The green line. So if any candle closes below this, then it would very likely come to the discount of this particular dealing range, which is going to be below this particular line. And in that case, a level that will become very important would be again this one, right? Because there is another fair value gap, and you see the equilibrium of this dealing range and the mean of this particular fair value gap is somewhere very close, right? Then from here to here it would be a fair high probable trade, and then here we'll have to see whether it wants to go lower and close below this, or it wants to again revert right from here. So that will be an important point of judgment at that point in time, right? But as I said, the first crack would be only when we see the 4-hour candle closing below this FVG, right? So that's how I'm going to be internalizing the order flow. Now, one of the other things that we'll see, what I was thinking about is that, okay, because we are now, this is all-time high, we don't have any prior data points to work on, right? Prior high and so on. So I just saw, if you really think about, look at it as a big consolidation on this 4-hour chart, where the price got to last week high, which was an all-time high, was very close to about 1.5 standard deviation of this particular consolidation. All right, so if the price pushes higher, this is sort of a measure that I'm going to take, right? That it may very likely get to about 2 standard deviation, which is going to be 18911 level. Okay, so this is how I'm going to be looking at the higher targets, because we don't have, as I said, any prior highs, right, to work on. So this is another sort of point that I'm going to be, sort of level, etc. I'm going to be looking at if it sort of purges this level and then tries to make again another all-time high. All right. So this is with respect to NQ. Now with ES, again, very similar story. I'm not going to be going into or repeating exactly what I said, but the weekly immediate rebalance level for ES is this. So this is 5264 level that I'm going to be monitoring, right, closely. And these are some of the fair value gaps and that we see here on the daily chart. So again, we'll have to monitor the levels, etc., as to where it's forming or coming. And on a 4-hour chart, just like NQ, I'd say that the first level or the first crack or bears having control would be a 4-hour candle closing below this. And once that happens, just like NQ, this particular equilibrium and this, and below equilibrium would be a very high probable trade, a short one, right? Because then it would want to get into the discount. And again, just like NQ, a very important level in that scenario would be this fair value gap. And if you look at it, the mean of the fair value gap exactly is in line with this equilibrium, right? So this becomes a very important level, and how price does it. Now, if I transpose this weekly IR, let's do this on this 4-hour chart, that's obviously lower. So this what can also potentially happen is the price comes through it, wicks through this fair value gap, touches this, and then reverts back, right? And if this happens, we see this signature, this would be very, very bullish. All right, so I'll be anyway sending updates through the week to monitor these levels, but this is sort of a how I am sort of looking at this week and potential levels, etc., and to identify the signatures for both bullish and bearish side. So that's about it for today. We'll be back tomorrow.